Hi, my name is Amy. Thank you very much for watching, and let's make some bad financial decisions together. This is for entertainment purposes only, so if you are entertained, please like and subscribe. So today, we're going to talk about TOST, toast. And the reason for that is because I was asking my favorite AI about something, but I typed in the wrong words, and it answered me anyway. And it amused me enough that I decided I wanted to dig more into it. So, what did I ask? I asked which Nasdaq based momentum stock has the best total return so far? And what I meant to ask was which Nasdaq based momentum ETF has the best total return so far? And the reason, well, first of all, stock and ETF are not interchangeable words, so I do not blame Perplexity for giving me this answer. Perplexity AI I like to use over ChatGPT for things like this because they actually return resources that they used in order to give me an answer. And that way I can click into articles and verify that it's not just giving me nonsense. So, Toast. And I didn't even look into it at first. I was just very amused by the business name. And my association with the word toast is there was this guy in high school, and on the first day of football practice, he threw up. And apparently he had a toast for breakfast. So for 4 years, toast? That's like they would just call him that. That was his nickname for 4 years. I never talked to the guy, but I knew him. I knew his nickname because all the time, toast, and just exactly like that. That's how they would say it. So I was just thinking, being nostalgic about high school, and I always felt bad for the guy. Like, imagine one mistake, and then for the rest of the 4 years, you're known for that one thing. And I never knew if he embraced the nickname or if that was just like, his nickname and he's resigned to it. But either way, don't worry. Nobody remembers that your nickname was Toast except for apparently me. So it's okay. Everybody's grown up and moved past that. But anyways, we should. I was like, okay, well, sure, it's had a 59% gain in the last 3 months, but what else? I know nothing about Toast. So I was like, why should I buy Toast? And why would anyone invest in it? So it's Toast Incorporated. It's a cloud-based restaurant management system. It's a point-of-sale system for restaurants. Apparently, they have 13% market share in the United States. They've had a 28% year-over-year growth. It's a comprehensive platform, so it's not just a point-of-sale system. It incorporates a lot of things like a mailing thing. They're expanding in the market. They have a 600% EPS. They're very optimistic and has very strong momentum. So 44.1% year to date, and it's beating the S&P 500, blah, blah, blah. So this is well and good and everything, but other than yield max, I've never considered buying and holding a single stock because you can beat the S&P 500 in the very short term and do day trading and really actively manage things. But in the long run, the S&P 500 is the benchmark for a reason. Although I also believe that with technology and all these algorithms and being able to analyze things, that we can use sector specific and like momentum specific ETFs that have a basket of stocks, that those could potentially beat the S&P 500 over time in certain market scenarios. So basically, my theory is I want things that will perform better than the S&P 500 in good markets, in bull markets, and I want things that perform better than the S&P 500 in bear markets. And that way, overall, I'm doing better than the S&P 500, which is, unfortunately, the metric. So I asked Perplexity, like, could you give me a scorecard system? And it did. And I was like, okay, but can you give TOST as an example? So their scorecard has 4 sections. 40% weight for the financial metrics. Their revenue growth is a 9 out of 10. Profitability, 4 out of 10. Free cash flow, 7 out of 10. Valuation, 3 out of 10. Which means it's a little overvalued right now, as per their metrics. Market position is 30% weight. Market penetration is 8 out of 10. Competitive advantage, 7 out of 10. Product impact, 8 out of 10. Their growth potential, which is a 20% weight. Industry outlook is 7 out of 10. Expansion opportunities, 8 out of 10. Analyst, yes, that word. Forecast is 6 out of 10. Risk factors is a 10% of overall weight. Solvency is 7 out of 10. Economic sensitivity is 5 out of 10. And that's because it is the restaurant industry. So if the economy tanks and people don't have a job, they're not going to restaurants. But if, buying power increases and people are going to more restaurants, then restaurants will need more robust systems to handle their point of sales. Competitive pressure, 6 out of 10, because it's a point of sale system. They're going to have competition. So the overall score of this is a 6.6 out of 10, which I think for me, well, first of all, I was never going to buy this in the first place because it's a single stock, but there might be things that score higher given this system that would probably be better to invest in. But if you are insistent on being in single stocks, this might be something that you consider as a diversification, like something that's in the restaurant industry, but still technology. But, it's it's not a restaurant and it's not cutting edge technology, but it is technology and it is the restaurant industry. So this might just be a good thing to use for diversification, and it does have momentum. And it's also nice not to talk about the same 3 hyped stocks that you see on YouTube. Just going to put that out there. So hopefully you were entertained. We've all learned about TOST Incorporated. What stock have you come across lately that you think is interesting, but you are absolutely not going to buy? I will talk to you all later. Bye.